I want to explain to you how to get a personal line of credit with bad credit from a credit union. Okay, so the thing is that if you have bad credit, you don't have a lot of possibilities, but there is one area, there is one type of institution where you can go to and actually be approved for a personal line of credit, even if you have bad credit. And that's actually a credit union. Why? Because credit unions have less stringent requirements, and credit unions actually they're actually are run like like a family business, if you will. Okay, and a credit union will probably know its members, especially if it's a small credit union. So, if you are looking for a personal line of credit with bad credit from a credit union, here is how to really go about it. Let me first give you the generalities here. When you think about a personal line of credit with bad credit from a credit union, you are thinking about affordability, but you are thinking about accessibility. That's the most important element, accessibility, because a personal line of credit is actually a form of revolving credit that can be actually used and paid down repeatedly up to the limits to the line's credit limit, right? As long as the line of credit remains open and in good standing. So a personal line of credit is kind of similar to a credit card. The thing is, when you have bad credit, you have options. I mean, you have credit options being closed to you, right? So the same way credit card issuers will not want to do business with you if you have bad credit. The same way personal line of credit lenders will want to focus on other lenders on other borrowers if you happen to be a borrower or an applicant with bad credit. Okay. The thing is that when you think about a personal line of credit from a credit union, you are thinking about a possibility to actually show your credentials elsewhere. What am I saying here? Basically, of course, you have bad credit. Okay, but do you have the ability to pay down your credit? In other words, are you working? What is your source of revenue? Okay, what is your banking history? What is your membership history with the credit union? And also, what is your relationship that you have with the institution? Do you have one account, two accounts, three accounts? Do you have more accounts? Do you have direct deposit with the credit union? Those things will help you actually get a personal line of credit for a bad credit from a credit union. The thing is, if you are trying to get a personal line of credit with bad credit from a credit union, you have to understand that normally you will qualify real fast if you have a credit score that starts at 650. Okay, but the good thing is that if you have the right credit union, you can qualify for a credit score. You can qualify for a line of credit even if you have a credit score of 400 and 450. I'm speaking about consumers credit union. I'm speaking about like if you have Connexus, for instance, you have teachers. Okay, you have a lot of credit unions that are pretty lenient. You also have BECU. So if you're looking for a personal line of credit from a credit union with bad credit, you can actually go to a BECU if you are in their area of geography. Okay, so even if you have a low credit score, you just have to make sure that you are able to contextualize the application. You have to explain why you need the funds. Okay, I mean, there are a lot of uses for a personal line of credit, but the ones that really will get you approved real fast include emergency expenses. So you can go to the credit union, even if you have bad credit, you can say, you know what, I need a personal line of credit with bad credit from you guys because I have emergency expenses. So maybe your car's transmission blows up, or you have medical bills, or the roof springs a big leak. I mean, a lot of things can happen. You can also think about long-term projects. So you can go to a credit union and ask for a personal line of credit if you want to finance long-term projects. For instance, renovating a kitchen, adding a mother-in-law suite, paying for a college or a wedding, restoring that 1957 Corvette, right? It's one of those things where you have a lot of expenses and you might need a personal line of credit from a credit union. You can also think about having a line of credit open to actually manage your cash flow. That can really help you also smooth out some kind of budgetary constraints. You can also go to a credit union to request a personal line of credit if you are trying to consolidate debt. So debt consolidation can be also an example why you need a credit union line of credit. And also, there are some rare life experiences like the cruise of a decade, playing the great golf courses of Scotland, taking a French cooking school vacation, and restoring that Corvette. So those can be really be costly. So that's really cool. Now, a personal line of credit, whether you get it from a credit union or a bank, resembles a credit card because there is a specific amount you can borrow against. You may use it for any purpose. You may use it for whenever, I mean, you may use it whenever you want, and you can pay off the balance over a long period. And in most cases, as you pay off the balance, you free up the loan amount to borrow against again. So if you are trying to get a personal line of credit, bad credit from a credit union, how do you actually go about it? What are the steps I want you to follow this year? The first thing you want to do here is that you got to really ask yourself, how much do you really need? I mean, everything starts from there, okay? How much do you really need here? And because, see, the thing is, when you think about a personal line of credit, you have a certain limits. For instance, the maximum that we have seen based on our investigation, whether you go from Navy Fed all the way to Penn Fed, all the way to Connexus, all the way to BECU and others, is $50,000. Maximum line of credit you can have $50,000. Okay. Now, personal lines of credits are unsecured. That's why credit unions and banks, for that matter, will put a cap on how much they are willing to be exposed, right? Because if you don't pay, they are actually they're destined to lose money. Okay, so first of all, be clear about how much you can qualify for. Number one, number two, you got to really ask yourself, how much can you afford to pay? So if you tap into the line of credit, can you actually make the payments? Because some credit unions will ask you to make payments on the go. Some credit unions will ask you to make payments after a certain period. Let's say you have a draw period and then you have a repayment period. The question is, what is your credit union asking you? So if they ask you to make payments on the go, then you have to really make sure you have the cash to make the payments, okay? And also, you got to ask yourself, what kind of credit scores are they looking for? Of course, they are looking for a bad credit, but how bad can the credit really be? Okay, how bad can it be? Is it 300? Is it 400? Is it 550? What is it? Because see, the thing is, when you think about bad credit score, the actual definition is anything below 579 is considered bad credit. Anything below 579 on your FICO score is considered bad credit. So how bad can how bad does your credit have to be? So those are three things. And number four, if you're looking for a personal line of credit for a bad credit from a credit union, you want to go local. It's true that it's pretty tempting. It's pretty tempting to go for a national institutions such as Penn Fed, Navy Fed, Connexus, or even Consumers Credit Union (CCU), right? But sometimes it's just better to go with a local institution because they know you more and they are more likely to approve your application for a personal line of credit for bad credit. So let me give you a few extras here. If you're thinking about a personal line of credit for bad credit, I want to explain to you that it's important to understand the pros and cons of a personal line of credit for bad credit from a credit union. Because a credit union is a pretty interesting institution in the sense that it is more likely to approve you, but it also has some challenges that you need to really go through. So, like any financial products, personal lines of credits come with pros and cons. Let me talk about the pros first. So, if you go to a credit union and you get approved for a personal line of credit, even with bad credit, the cool thing is you will automatically have easy access to funds. So, if you get approved for $50,000, as long as you tap into the money and you pay it back, the money is there actually for you. You can use it for all kinds of projects, all kinds of possibilities. Okay, you have a relatively low interest rates. If you were to go to a normal loan, you might be paying a 20% or 10% or 15% APR. But if you go with the line of credit, maybe 15% or 12%. And because the line of credit is unsecured, basically you have no collateral required, okay? And you can use the personal line of credit for bad credit for overdraft protection. So that's kind of cool. On the flip side, if you go to a credit union, basically there could be a tough qualification for borrowers with very, very, very low credit scores or even poor credit history. Let's say you have, in addition to having a poor credit history, you also have a check systems entry. If you have a check systems entry, that could be really worse for you. And also, some credit unions might charge fees to actually issue a personal line of credit for bad credit because they want to really cover their costs too. Okay, and so you may have to reapply at the end of the draw period. So this could be a little problematic also, especially if you are trying to really structure your finances. So if you are trying to get a personal line of credit for a bad credit from a credit union, at some point you got to ask yourself whether you want to really go with a secured line of credit or an unsecured one. It really depends on what you're really looking for because every solution has its pros and cons, okay? And it's one of those things where it depends on what you are trying to achieve. Are you trying to save cost? Are you trying to reduce APRs? Are you trying to, let's say, tap into like more money? Okay. For instance, when you think about secured credit lines are typically cheaper at credit unions and even banks for that matter, and regardless of the credit score you have. So because when in a secured transaction, the credit union or the bank is actually covering its back, quote unquote. Okay, let me give you a few examples, if you will, of secured credit lines. I mean, HELOCs are a widely used form of secured credit lines. So HELOCs use equity in real estate as collateral and are really second mortgages attached to credit lines. So examples of a secured credit lines include home equity line of credit, HELOC, vehicle loans. So this is really, you also have pawn shop loans. You have life insurance loans also. You have savings secured loans. And you also have prepaid credit cards. So if you have a prepaid credit card, you actually have a secure line of credit. On the flip side, you have unsecured credit lines. So credit cards are actually the most common form of unsecured lines of credit. So personal line of credits, whether you get them from credit unions or banks, actually often come with lower interest rates than credit cards. Okay, and the difference actually might be considerable. Personal line of credit lenders can offer advantages such as flexible repayment schedules that most credit cards don't actually. Okay, something to think about. So let me give you a few examples of unsecured credit lines. Here you have credit cards, of course. You have personal lines of credit. You have personal loans. That's really important, personal loans. You have peer-to-peer loans. So peer-to-peer loans, you don't get them from credit unions. You get them from peer-to-peer platforms, P2P platforms. And you also have payday loans. Payday loans also, you get them from third-party platforms. If you're trying to think about if you want to get a personal line of credit for bad credit from a credit union, you got to really ask yourself, what's the big difference between revolving versus non-revolving lines of credit? Okay, so just that there are two forms of credit lines, secured and unsecured. There are also two functional ways they operate, revolving and non-revolving. So when you think about revolving lines of credit, those are also called open-end credit. So the amount that you use or borrow can be different every single month, and you barely have to pay off the balance at the end of the month. That means you can carry a balance from one month to the next, although interest makes the amount you owe grow. So gas stations and department store credit cards are basically revolving credit lines. So are most Discover, Visa, and Mastercard credit cards. Okay, so any loan that allows you as a consumer to borrow portions of the credit limits charges interest only on the outstanding balance and frees up credit as the balance is paid down, amounts to a revolving open-end credit. So the consequences of being unable to pay a credit card minimum payments are late fees, damage to your credit reports, and penalty interest rates. And home equity lines of credits are revolving lines of credit. So the amount you can borrow is based on a percentage of your home's appraised value, usually 70% to 80%, minus the amount still owed. So that's really important. Okay. And what about non-revolving credit lines? So non-revolving credit lines, also called closed-end credit lines, provide a fixed amount of money to finance a specific purpose and a period. Okay, the loan may actually require periodic principal and interest payments, or a payment of the entire principal at the end of the loan term. So examples of non-revolving credit lines are most real estate loans, auto loans, appliance loans, and payday loans, which are really small, short-term loans secured against the customer's next wages. So that's important to really think about. So if you are thinking about a personal line of credit for bad credit from a credit union, you have to really understand that there are actually other revolving credit sources. Okay, so you have, for instance, overdraft protection. That could be a possibility also. Okay, and so overdraft protection on checking accounts at credit unions or banks. Actually, this overdraft protection is considered a revolving source of credit. So some revolving personal checking lines are also available in some banks and credit unions. And banks and credit unions establish credit limits and deposits limits money, actually money in the bank for you to write checks against, instead of you depositing money in an account and then writing checks against that amount. Okay, so that's important. So travel and entertainment cards, TE cards, are popular with people who travel frequently. So cardholders use them to pay for car rentals, dinner, golf, tennis, spa visits, and access to airport lounges. And so that's really good. And Diners Club and Carte Blanche are two TE cards. They must be paid off every single month, though. Okay, and so that's really important to think about. And so if you're thinking about getting a personal line of credit for bad credit from a credit union, maybe your best bet is to actually use a HELOC to actually get the money. In other words, you are trying to use if you have a house, you want to use the equity in the house to actually increase your chances of getting a line of credit here, okay? Because a HELOC is actually secured by the equity in your house. So your equity is actually defined as the home's market value minus its outstanding mortgage balance. So this is kind of cool. So rarely can you borrow against all the equity in your home. Instead, lenders apply a formula to the maximum size of a HELOC, expressed as the combined loan to value ratio. Okay, so that's kind of cool because it gives you possibility, but also allows you to actually tap into cash real fast. And by the way, if you have a business, you can also try to have a business line of credit from a credit union if you qualify. Let's say if you have bad personal credit, but you have good business credit, you can actually use the business to get a line of credit. Okay, and here you can actually qualify for larger loan amounts. Like this can go all the way to 150,000, in some cases, $250,000. So that's really good because they are also usually unsecured, which means collateral, inventory, real estate doesn't really come into play, and that's kind of cool because it gives you a lot of possibilities. So here's a coda into this conversation. I explained to you a personal line of credit for bad credit from a credit union. I gave you the generalities, the steps, the extras, and the coda. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.